How's it going, everyone? This is Nick. I am back here with yet another Reventure Consulting Market Deep Dive, where we take a look at a new city across the country every single week, and we dive deep into what the data is saying on the real estate market and the local economy in that city. And today I'm really excited to bring you guys Charlotte. This has been one a lot of you have been asking for, and I'm finally happy to deliver. So what we're going to do in this video is we're going to take a deep data dive into the Charlotte real estate market and economy. If you're a home buyer in Charlotte, if you're a potential real estate investor in Charlotte, if you're thinking of moving to Charlotte and just want to learn more about the city, this video is going to be great for you because we're going to break down all of the data that you need to know related to those things I just talked about. Now, Charlotte is a super interesting market because it is a growth behemoth. I mean, it is adding jobs, it is adding migration at record rates. It's one of the top growth markets in the country. And of course, that is great for real estate values. Real estate prices in Charlotte have gone up a lot over the last 5 years, actually top 10 in the US in terms of real estate price appreciation the last 5 years in Charlotte. So there's lots and lots of good things going on in the market, and I'm going to touch upon all of those things in the video. However, there's also a couple headwinds in the market. There's a couple things that local real estate owners, local investors need to be concerned about as well. So I'm going to make sure to touch upon that in this video. We're also going to get even more specific, and we're going to take a walk through Charlotte on a zip code by zip code, neighborhood by neighborhood level. We're going to show you what are the areas in Charlotte that are most expensive, what are the areas with the highest incomes, also what are the areas that are most affordable, and most importantly, where are the areas that are seeing the most appreciation. If you're a home buyer or investor in Charlotte, you need to know all of these local specifics before you make your decision. So, without further ado, let's get into the data. So the epicenter of Charlotte's economy is rooted in the financial services and banking sector. So actually, after New York City, Charlotte is number one, the number one banking city in America. A lot of people don't know that. So Bank of America has their headquarters in Charlotte. They employ thousands and thousands of people. Truist Bank has their headquarters in Charlotte. They employ thousands and thousands of people. So you have lots of front office and back office financial services jobs that are propelling the Charlotte economy forward and really giving that demand for homes and apartments and pushing the real estate market up. Additionally, Charlotte also has some good diversification. Lowe's has their headquarters there, obviously the big home retailer Lowe's, as well as Honeywell, which is an aerospace engineering company. So there's not just financial services, there's good diversification. And where the rubber meets the road on all of this, all these companies, right, is jobs. Right? That's the metric you want to look at. What is the job growth in a city like Charlotte? How many jobs are being added each year? And how does that job growth compare maybe to some of Charlotte's southeastern compatriots, right? The other cities in the south that Charlotte maybe competes with for people. How is Charlotte's economy doing relative to those cities? That's a really important question to ask and answer in terms of real estate analysis. And what we're looking at on this graph is the growth in jobs in what's called non-farm payrolls in Charlotte over the last 10 years. And this is data that comes from the Bureau of Labor Statistics. So we're looking in the growth in jobs starting in 2011. And Charlotte is this blue line. And we're comparing Charlotte to four other cities here: Miami, Atlanta, and Tampa. These are four other kind of similar cities in the Southeast. And what really sticks out is that, starting in 2012, 2013, we can see Charlotte, right, is already kind of coming out ahead of these other markets, but it's somewhat close. But then starting in 2015, Charlotte's job count just starts taking off, right? You can see this job growth just really starts separating itself. The blue line starts growing far above the gray line, the gray lines. And that means Charlotte's economy is growing a lot faster than the other cities in the Southeast. So I put a lot of time and effort into these videos. I love sharing this data with you guys. In return, all I ask is please just hit the like button. Hitting the like button, that tells YouTube that it's a good video, gets me a little more exposure. I would just really appreciate if you could do that. Also, please comment, especially if you live in and around the Charlotte area. I want to hear what you think. What's your local insight? Are you moving to the city? Do you agree? Do you disagree with what I'm saying? Anything and everything. please leave a comment. I make sure to respond to pretty much everyone. And additionally, make sure to subscribe. We do a new market deep dive for a new city every week. In case you don't live in Charlotte, I could be talking about your city next. So please make sure to also subscribe. All right, let's get back to the video. Of course, Charlotte, like many other markets, had a dip during COVID. However, it's bounced back pretty well. Basically, through early 2021, Charlotte has grown its job count by 24% from 10 years ago, over almost 240,000 jobs. That's still less than the number it was before COVID, but it's getting back there. And you can see that Charlotte at plus 25% is better than Tampa, plus 22, Atlanta, plus 18, and Miami at plus 15. So Charlotte's economy is no joke, right? And this is an important thing to look at, that BLS jobs data. Because if you talk to local real estate operators or local realtors in any city, they're going to try to tell you that their city is growing so fast. But in the case of Charlotte, we know it's actually true. The data is supporting that. The job growth in Charlotte is really at a next level compared to other cities in the Southeast. And really, it's that job growth which has been propelling Charlotte's real estate market forward over the last 5 to 10 years. Since 2016, home prices in Charlotte have increased by over 50%. Just in 5 years, over 50%. That's more than 10% per year annual appreciation in Charlotte, according to data from Zillow. That's tremendous growth. And that's actually top 10 for any metro area in the US. Charlotte is top 10 in terms of real estate appreciation over the last 10 years. And really, the main fundamental reason for that is all the job growth, all the big corporate headquarters that we just talked about. That is pushing Charlotte's real estate market up. And you can see Charlotte's tremendous appreciation over the last 5 years on this graph, where we see actually Charlotte comes in at number 10, plus 52% home price growth. The typical price of a home in the Charlotte metro area, which includes Mecklenburg County, the central Charlotte County, as well as outlying counties all the way down south to South Carolina, and then also further north in North Carolina. The typical metro home price increased by 52% from $182,000 to $277,000 over the last 5 years. That's top 10 appreciation in the U.S. And you can see, Charlotte's right up there with markets like Seattle and Phoenix and Salt Lake City. Not really there with Boise, but no one really is next to Boise. And you can see this red line is that the typical metro grew prices by 37%. Charlotte was at plus 52%. So really strong appreciation. But what I actually really like about Charlotte is that 277,000 typical home price number. That's still extremely affordable, right? If we look at a lot of other markets on this list, Provo, Utah is a typical price of $424. Seattle's at a typical price of $615. Colorado Springs is $392, Phoenix is $350, Salt Lake City is $454, Ogden's $395. Charlotte is much cheaper than all these other markets which have experienced high growth, and that's a good thing, right? Because if you've watched some of my other videos, you know that I think that we're in a broader housing bubble, and I think markets with a lot of downside are ones that have had high appreciation combined with expensive current day prices. Charlotte's had high appreciation, but its prices are still relatively affordable today compared to wages and rents in the local economy. So that makes me feel more confident in a market like Charlotte maintaining its value through a housing downturn than some of the other markets at the top of this appreciation list. And affordability is so key. It's absolutely fundamental. If you took a look at the video I just posted on Sunday talking about the best and worst markets to invest in, you'd have seen that basically affordability, the ratio of prices to wages in the local economy, that explains so much about how durable a housing market is over the long run. So the fact that Charlotte prices $277,000, typical price across the whole metro, is pretty closely aligned to the local wages and rents is a great sign for the housing market in Charlotte in the long run, right? There's still some room to grow. However, there is one headwind really that I'm paying attention to in Charlotte, and this is something that a lot of economies in like the Southeast, a lot of housing markets in the Southeast deal with, but Charlotte in particular has this issue, and it's not really a problem for society per se. It's actually a good thing for society. It's just not so great for real estate investors who care about appreciation, and that's the fact that Charlotte it permits and builds lots and lots of new homes. So when you look at how many new permits are pulled each year for single-family homes in Charlotte, it's increasing significantly. Builders are building lots and lots of new homes in Charlotte, whereas in other parts of the country, there's more of a supply shortage. So because of that, because Charlotte is expanding its housing supply so much, I think it's very unlikely that we're going to see the same types of appreciation in the future in Charlotte that we've seen in the last 5 years. And you can see what I'm talking about on this graph. And what we're looking at here are the amount of single-family home permits pulled per year in Charlotte. The amount of single-family permits pulled. So when a developer or home builder wants to build a home, they go to the local planning and development office, the city council, they pull a permit, right, to build that housing unit. And you can see that back in the early to mid 2000s, Charlotte was pulling permits at about 20,000 to 23,000 per year. And that's a lot of new homes. That's a lot of new homes in Charlotte. And like many other markets, Charlotte overbuilt in the mid 2000s. It overbuilt, and then there was a crash in building that aligned with the housing crisis, right? All of a sudden, housing prices collapsed, builders stopped building new homes. And then, slowly in Charlotte, we've regained, slowly but surely, the amount of new home building and permitting. But then really over the last year, since COVID, we've seen a big spike from about 16,000 permits per year to now 20,000 permits over the previous 12 months pulled. And that 20,000 permit number is starting to get pretty close to what it was in the mid-2000s. And like I said, this is a great thing for just people in Charlotte in general, is that builders, they're building a lot of new homes. There's new homes, there's help on the way. That's a great thing for society in Charlotte. However, it means that those previous rates of appreciation are probably not going to be attainable. And so I think the way to think of this, right, in terms of the permitting, is that Charlotte's achieved 50% appreciation over the last 5 years. And it did that with annual permitting around 13,000 a year for new single-family homes. Now that permitting is going up to 19 and 20,000, basically a 35% increase. So for Charlotte to maintain its recent history of appreciation, it's going to need demand to increase by 35%. And that's just not likely to happen, right? We saw in the job growth graph, Charlotte's job growth is great, but it's still well below what it was before COVID. It's not likely that we're going to see a 35% increase in economic activity and migration into Charlotte over the next couple of years. So you can expect that big surge in permitting is going to slow down the price appreciation in Charlotte, and it's going to help make the market and keep the market affordable. And like I said, that's a great thing for society. It's just something to note as a homeowner or real estate investor in Charlotte, is that you're going to have a lot of inventory coming down the pike, and that's something to watch out for. Now that we've covered Charlotte on a more broad macro level, we understand how its economy works, we understand how its real estate market works in general, we need to get more specific. We need to understand what are the local dynamics in Charlotte, because after all, real estate is local. It's not enough to know what's going on more broadly in your city. You also need to understand on a neighborhood by neighborhood, block by block basis, what's going on in terms of appreciation, in terms of affordability, income. These are all things that drive big differences in real estate prices and appreciation within a city, right? And I think the best way to start looking at that for Charlotte would be to understand where are the expensive areas in the city, where are the expensive high income areas, and then where are the more affordable lower income areas. This is like the first place to start in terms of segmenting the real estate market, and as a home buyer and investor, trying to understand what's the neighborhood that's right for me based on my goals. And what we're looking at on this map is every zip code in the Charlotte metro area, and the zip code is colored by the typical home price in the zip code. So the more purple or magenta it looks, the more expensive; the more blue it looks, the less expensive. And one thing that jumps out is this is the whole metro area for Charlotte. So we have more of like the center of Charlotte right here, but then we go all the way down to like Rock Hill, South Carolina. This is part of the Charlotte metro. We go all the way up to Mooresville. This is part of the Charlotte metro. So we have a pretty big geographic footprint, and that means lots of different areas for you to analyze as a potential home buyer investor in Charlotte. Now, I think the first thing that jumps off the page is that almost all of the kind of really high-priced real estate in Charlotte is concentrated just to the south of the central business district. So right here, this is uptown Charlotte, which is where all the businesses are. If just to the south of there is where the high-priced real estate is, where you see the pink coloring. 28207 Myers Park. This is like the preeminent high-income, high-price zip in Charlotte. The typical home price is $1.1 million, and with a median household income of $136,000. So that means the middle-class family in Myers Park earns $136,000. And $1.1 million, there's actually no other zip code in Charlotte even close to that. And so this is really where, in Myers Park, this is where you see a lot of the wealth. And if you're a home buyer with a bit more money to spend, this would potentially be a neighborhood you want to look at. As would be Cotswold, 28211. Typical home price here of $635,000. It's the second highest in the Charlotte metro. Really nice neighborhood. Lots of kind of older homes, also recently renovated. So you can't go wrong if you're looking for really nice, high-income, high-price neighborhoods to the south of Charlotte. And you can see that this shade of pink kind of continues all the way down south through Carmel, Ballantyne. And so that's where the wealth and the high prices are in Charlotte, south. It's actually a pretty interesting result, because if you've seen some of my other videos, different market deep dives, you'll notice actually that in most cities, it's actually north of the central business district where the high-priced area is, but Charlotte's the exact opposite. It's south, and it kind of continues all the way south down to South Carolina, where all those high-priced, high-income areas are. Now, you probably saw on that map, there was a lot of blue. There was a lot of areas of affordability, right? And so that's the great thing about Charlotte, just to repeat, is that there's so many different areas where prices are reasonable compared to local wages and rents. That means that as a home buyer who lives in Charlotte, you're gonna have an easier time buying a home, affording a home. It also means as an investor, you're gonna have an easier time buying a property and earning some cash flow from renting it. But now I think really what an important question to ask is, all right, so we know where the expensive areas are and where the affordable ones are, but where is the growth? Where is the appreciation? What are the areas that are seeing the biggest upticks in prices? Because that's also a really important thing to understand. And Charlotte, like almost every other market that I've done this on, it's a consistent trend in every city. The areas with the highest appreciation are the ones with the lowest prices and lower income levels. That's just like a consistent trend across America in the last 5 years in almost every market. Charlotte holds to that trend where it's the more affordable areas just outside the central business district that are seeing the biggest appreciation. And you can see that represented here on this map. So again, we're back to the zip code map, and the color coding is a bit different now. Instead of looking at price, we're looking at price growth. So the more magenta or purple the zip code is, the higher the price appreciation. The bluer it is, the lower the price appreciation. So you can actually see real quick that southern stretch to the south of uptown Charlotte, which has all the high prices, actually has pretty mediocre growth on a percentage basis compared to the rest of Charlotte. It's really these really hot purple areas to the west of Charlotte and to the north that have seen the most appreciation. So 28208 Ashley Park. Typical prices here have more than doubled over the last 5 years, going from $90,000 to $205,000. 28217, also prices here have doubled, going from $111,000 to $218,000. And then 28206, again, prices have more than doubled from a similar range, $95,000 to $216,000. What you'll notice is that the income levels in these zip codes are much lower. You can see here that the median income based on census data from 2019, that's the most recent available, was $32,000 in 28206. So 32,000 median income. Home prices were around 3 times median income 5 years ago. Now home prices are around 7 times median income. So that's definitely something to watch out for, is that home prices in some of these zips are starting to get much higher than the median income rates. There's also another really high growth area, and that's further to the south in South Carolina. So Rock Hill, which is in York County, South Carolina, has also seen a doubling in home prices. Some other high growth zips also just around it. Rock Hill, York County, there's lots of growth here. Income levels are definitely a little higher than they were in those more urban Charlotte districts. A great way to understand whether a neighborhood is actually fundamentally improving, not if, just like prices are getting more expensive, but if it's actually really gentrifying, is to see if income is improving, right? If income levels are increasing in an area, well, that supports home price growth. If you see home price growth occurring without an increase in incomes in a certain zip code, that's a warning sign. And it's a bit of a mixed bag in Charlotte. Some of those high growth zips don't really have much income growth, and that's concerning. Others do have more income growth. So you really need to take a look at things like income growth and also looking at the amount of college degrees. College degree rate in the zip code are great ways to understand whether an area is truly improving or if it's just a service level increase in prices that could come crashing down. And so I actually help people from around the country use data like what I just described to make more informed and better decisions about their real estate investments, whether they be buying a home or an investment property. If you want to learn more about my one-on-one coaching program, go to www.reventureconsulting.com. Go to the contact form page and submit a contact form. Give me a bit of a description as well about what you're doing in real estate, and I will be sure to get back to you. I can explain how my one-on-one coaching program might be able to help you use data to make more informed decisions about your real estate investments. Additionally, if you're enjoying this content, please make sure to hit the like button. I put a lot of work and effort into these videos. I love sharing this data. It just makes it a lot easier for me to do that. If you guys can hit the like button, helps YouTube know it's a good video, gets me a little more exposure. So hit the like button. Also, definitely comment. I want to hear from you. What do you think about the data? Do you disagree, agree with my conclusions? Especially if you live around Charlotte, I love hearing local insights. So let me know, what you think about the housing market in Charlotte. And additionally, subscribe if you haven't done that already. I have a new market deep dive every single week. Could be covering your city next. So make sure subscribe so you don't miss out on that. All right, until next time, this is Nick from Reventure Consulting signing off.